Welcome to our presentation More on Hein by request. I am Kathryn Kirkland. I am co-presenting in this program with Jim Schaefer. 1 week after we released our 15-minute video on Hein, we received a request by email to expand the segment on input to support software. This More on video is in response to a viewer request.
A depreciation deduction is an allowable deduction against gross income for a business that reduces the total tax liability. In some cases, the effect of a depreciation deduction is to reduce a positive income to a tax loss. Case law has made it clear that no depreciation deduction for income property or automobiles or machinery used in a business is permissible for family law purposes of calculation of income available for support.
To understand the support software input for depreciation, the user must understand that the software must first calculate the tax liability. Let's refer to this step as number 1. Once the income taxes are known, the software calculates support. This would be step 2. This approach is key to understanding the input for rental properties. We are using rental property as an example for our discussion of depreciation. Our first step is to give the software the information it needs to properly compute taxable income and the resulting tax liability. We will shortly review step 1 by simple example.
The actual tax liability for family law purposes must be calculated by the computer. The tax liability is not what is reported on the tax return. The actual tax liability for family law purposes can only be calculated after all the necessary information has been input into the program.
The amounts for rent received, real estate taxes, mortgage interest expense, other operating expenses and depreciation expense are all required to determine the income taxes. Here is a quick example of monthly amounts. Rents $1,000. Expenses $650. Depreciation $150. Rental income totals $200. Enter $200 on the software input line titled Rental Income, which drops down from the other taxable income line. In step 1, depreciation is subtracted from income just like on a tax return. Otherwise, income available for support and the resulting support amount would be incorrect. We proceed to step 2. In step 2, we make the entry for depreciation for a correct support calculation. For step 2, go to the other non-taxable income, and click on the drop-down menu. Locate the depreciation and other line and enter the $150 depreciation expense as a positive number. This is all that is required for step 2.
If you are arguing the correctness of this two-step approach at trial or settlement, we suggest that you locate the depreciation and other topic in the DissoMaster manual. Steps 1 and 2 are described at that topic. The manual is accessed by starting the DissoMaster program, then clicking on Help at upper left when facing your computer screen, then click on these tabs in this order. DissoMaster Manual, Index, Depreciation and Other. Finally, Jim and I thank Mr. Art Grater for his helpful suggestions in the production of this video.